All right, guys. All right, welcome to another live session, guys. Sorry I didn't make yesterday. I got really busy. I couldn't be there. But let's just continue on with where we are. Now, from the last time we spoke about the dollar from last week till now, we've had some really good progress. Now, I'm using TVC. We can look at other dollar index charts to see for similarities and differences. The reason I'm saying that is because of this liquidity gap here. I actually haven't checked to see if it's reflected the same on other charts, but you can see if I start from the weekly over here. All right, let's go over here. So if I start from the weekly right here, you can see that price has really firmly pushed into this supply order block I was talking about and filled this unfulfilled efficiency. Now, because of the equal highs here that we've been discussing and I've been mentioning a few times, the price may easily be attracted to this either in this week or future weeks to get to these highs and run these highs. But the thing is, because there's a liquidity void, we could see the price pushing higher. And even then, there's still another liquidity void because this supply zone here that produced this short, we haven't had a return here either. So we could go all the way back to 106. Now, the breaking point for a really bullish time on the dollar is if the price breaks above this supply order block, which I spoke about extensively last year. So if we analyze the price action carefully, looking at what the price did, so when it pushed down here for the short during July, and then from the middle of July until September, every single candle was bullish. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 bullish weeks in a row. Okay. Now, 11 weeks in a row is not something that's normal. Okay. And so for me, I do think that this was definitely something that's artificial strengthening from the dollar. But nonetheless, it happened anyway. And then we've had this pullback. Now, the pullback hasn't been weak. It's been equally as strong, but there are a few green candles mixed in with the red ones, suggesting that the bullish trend here is not as strong as the bearish trend going down. Secondly, because of the way the price ended here, we didn't get the full reversal. If the price did like a 90% or 95% reversal, then I know the price will be pushing short. Now, looking at the structure of the price, we may very well get this push up here. But the break here with a body, now I have to be specific. If the body of the candle closes above this weekly order block, then we're going to go for a very strong long. And reason being is that if we just look up here, I just want to drag this to show you what we've got. Between this price point right here and this high right here, we have what would be referenced as a fair value gap. Okay, we have a gap between price delivery. We have sell positions, but not buy positions to match it. So as a result, there will be a strong move if the price breaks here from 106 to 110 at least. And I've always told you that I do think the dollar is going to have one more bullish time before it ends off, with a very strong bearish move for that will last for a very long time. But before that, if I go to the daily time frame here and just take a look at what the price is doing. So we've had a strong bullish week. Now, the price has broken out of our area. We had the body close here above this area, which was the seal of the deal. And you can see the next couple of days was crazy. All right. Now, if I go to the H4, I just want to show you a few things here. So on the H4, okay, and then we'll go to the H1. We had this reaction here where the price filled an old fair value gap where we had bearish prices offered, but no matching bullish prices or buy prices. So when the price came here, we had a short time of a pullback this morning. But as we've come into the afternoon, prices already come back about 85% of the way to where we started from in the day. Now, my thing is what I'm really looking for is, where price is going to go next. On the H1, being surgical with it, there's a lot of information we can gather. Now, this liquidity gap, I just want to verify that it's not a gap specific to TVC and it exists at least on one or two other charts. So that's how I check things these days. In the early days, if I see a liquidity gap on just one specific chart, then I'm expecting that gap to get filled. But then you go to other places and you realize that that gap is not necessarily coming from the market. It might be a broker issue or something like that. All right. But the high of yesterday's here, and the fair value gap low, the beginning of it starts here. Really, all I want to see is the interaction. Now, I know today is Thursday and tomorrow's Friday, and Friday is very characteristic for, reversing against trends that were created already or, things like that. So my thing is that I would prefer if you know, I'll wait. And if you want to do the same, you can. I'll prefer to see what the price does first at this high before I proceed. Now I've made some profit with gold. I even passed a funded account challenge yesterday using gold. So it's been a great ride down. But my thing is I still want to take a look at possibilities of what the price may do. Now, this H1 order block is very powerful information to me. When the price dipped in here, it really did look like it was going to break beneath, but the price just completely flipped the other way and has continued to go long. Now, if the body of at least maybe two H1 candles and above close above this high very strongly, especially if we get like a body close where the midpoint is at this line here of that candle, bullish candle, then we know the price is going to continue on with this bullish run that it's on. But if the price kind of hangs around and we get wicks above the high, then there's very much a chance the price might reverse here and pull back the other way, because Friday is just characteristic for it. Okay, last week the actual movement, the initial movements, like the early movement for this trend that's been happening, actually started on Friday last week, which is pretty rare, but it does happen sometimes. So in order for you to get the full whack of the move from top to bottom, you would have had to swing your FX trades anyway, FX pair, US dollar trades, or major pair trades from last week. But if not, you didn't do that, which I wouldn't personally do. I just don't like to hold over the weekend most of the time. This was a great kind of opportunity here. So right now it's 2:39. So the US Open just happened, when the US market opens, and we've had a reaction. It will of course affect the dollar because the US 30 is probably going crazy right now. If I had a look, we'll probably see it's doing a craziness. But either way, we'll come back to US 30 in a minute because I've got a couple of things to say. But anyway, for now, I just want to see the interaction of yesterday's high, what the price does with that. Okay. We do have a strong amount of demand order blocks supporting the price from dropping any lower. But if the price chose to break beneath here, then yeah, that would be interesting to see. Now, the thing I wanted to compare quickly is just this gap I was talking about, which is down here. I have a liquidity gap that I'm trying to. Now, when Hugo's Way still had an IC markets. Um, but I think it's just a thing of I don't want to rush it, but let me just quickly go to the other US dollar indexes first and we'll come back. All right, so on this dollar index chart, we have the same liquidity gap. So that's one extra chart. Let's go to the index one here. All right. So again, same thing. We have a liquidity gap here. That's two charts. Let's go to ICE, which is of course a very large liquidity provider. So that will be good. So even ICE has this liquidity gap here, which I consider ICE to be part of the tier one, top tier places to get information about the price because it's very, very good quality information. But anyway, as you can see here, this gap is actually on every chart. So this gap that's been created here, this would be 5 o'clock my time, has been created and not been filled. And so my thing is, if the dollar wants to have a long-lasting rally, it doesn't have to fill this gap. But if it could fill this gap before proceeding further, I do think it will be pretty helpful because at least a gap like that being filled, when the price continues to go long, for those of us who are going to try to trend trade the dollar on the way up, for it's kind of how I consider it as a last bullish move, that will leave a really good amount of room to kind of, feel comfortable to hold on. But I just find it annoying personally when the market is doing a really lovely bullish move, but then it leaves a gap here because the back of your mind, you're always thinking that someday this is going to get, this is going to be a situation of reversal, and reversal that will happen probably really fast. All right. So with that in mind, this is my analysis on the dollar. And as I said, for the next couple of months, I'm not going to be analyzing anything else. I think for the rest of my trading career, I kind of made up my mind that I just want to focus on major pairs. Major pairs, as I said, we have a great advantage over other. And when I say major pairs, I mean pairs that the dollar is either the base currency or the quote currency. So like um NZD USD, AD USD, gold. Now gold is because it's a CFD of gold futures or just gold price in general. I won't consider it major, but it's something definitely you can trade. But USD CAD, USD JPY, USD CHF, Euro USD, those pairs, Pound USD, the famous ones that we all know. Because we have the dollar index to provide an extra layer of confluence to what we're analyzing, I just think they're superior in terms of choosing them as a pair. Now I know the Japanese yen pairs, and whilst I'm talking, I'm going to switch over to uh my MetaTrader charts to talk about the trades I'm looking at. But I know that to me, I find them superior because when you can do intra-market analysis with major pairs, it just makes your job easier. Now, again, as I was saying, the Japanese yen pairs, I know that they are powerful pairs and they do provide some really good movements. But the only problem is that, I mean, if you really want to get into the nitty-gritty and find correlations in other markets to help you understand when maybe something like pound Japanese yen or Euro JPY is going to move, because I know when they move, they do move. It is going to take a little while. With the dollar index, it helps so much because we have clear correlations, especially when things are trending in the correct direction. So I mean by that, USD CHF, all the USs, so USD CHF, USD CAD, USD JPY, they're all pushing long, and we have the inverse going on, NZUSD, AUD and etc. Euro USD, Pound USD are going short, meaning that the dollar is the overriding theme of the price action movement and is not the individual current, economies, currencies like the pound, Australian dollar. Now they will all, of course, move at different pip amounts because depending on that country. So for example, pound USD, because I know I'm saying this, I think I should visualize this for you. I give an example. So if I switch my screen back, I just want to show you one thing to explain what I'm saying. So if I go to the H1 here, and let's just talk about yesterday. So yesterday at a certain point, which is here, so around about, let's say 8 o'clock my time in the UK, the strength of the dollar reversed from bullish to bearish for quite a while. Okay, now if we've traced that same period of time yesterday, what was going on and how that reflected. So I'll start from the top here. So we got AUD USD. So AUD USD also responded a little bit later, but still responded where the price came in with a reversal. If AUD USD or any of the AXUSD pairs are going long, it means the dollar is losing strength. So we had this movement here, which was about 50 pips before the price proceeded to come back down again as it is now. So go short. If we go to USD CHF, USD CHF kind of followed the pattern almost the same. We had about 48 pips of a drop, but you can see the price has already superseded the previous high and it's on its way going. Pound USD, on the other hand, when this reversal happened, okay, it was a bit much more reactive to the movement. So it got in around about 7. So whilst the price was actually changing direction, it moved at the same time. So at 7 in the morning, what aided this movement, by the way, is that we did have I believe it's the unemployment rate or claimant count change with the pound, which added to the reversal speed. But I guess the news was bullish because we had this movement. But you could see the price gave us 80 something pips, and then we had another swing here around about same time again, 3 o'clock. Says 50, it says 17, so that'll be 3. Had another bullish move. But you can see the distance in movement of reversal. AUD/USD did 50 pips. Pound USD is done. Whichever length you want to take, let's just make it fair. Did 60 pips. So we had a slight more responsiveness to the weakening of the dollar. So a little bit more strength from the pound and the Australian dollar. That's what I mean to say. So when you're picking these pairs, of course, if the other side of the currencies have their own fundamental stuff going on, you might put yourself in a position where you could end up getting a little bit more out of a little bit more benefit out of the trades if you choose the right pair out of the set. Okay, right now, I mean, USD JPY would be awesome to trade long compared to the others because you can see It's just blue candles all the way. There's a lot less resistance to the price pushing long on the Japanese yen than other pairs. And the reason being with Japanese yen pairs, their whole design is to be as weak, relatively weak compared to, major world currencies because of how the economy works. The economy is a heavily export dependent economy. And so exchange rate means a lot to them. The cheaper they are, for you to use their currency to buy or to buy, in exchange is the better, for them. So you find that when the dollar is trending, USD JPY is amazing to trade because you're going to have it slicing through butter with a hot knife. Hardly any resistance to buying. Whereas with USD CAD, if I go to the same H4, you see that there are pockets where the price pulls back, then continues going long. Equally, you don't get as many pips. USD JPY has done, from the beginning to the end so far, is done 359 pips. Whereas USD CAD, I don't think it's past 200 pips yet. So if I take it from this lowest point here up to here, we have 1,600 excuse me, so 161.4 pips. So basically half. Now, in terms of pip value, I can use the indicator that I use to check it. This is just a quick recap to show you, okay, what we're looking at. So I'm just going to use the basic 0.01. All right, so this would have given you £8.89. This is a pound account, just a demo account to play around with. All right, and then if we did the same thing down here, all right, you would have made, at the best, you would have made £18.86. Okay, so you can see there's a big difference in the amount of money you would have made. Now, of course, this is 0.01. If this was one lot, then you're talking about 1,886 compared to $800, £800, sorry. So that's £1,000 difference if you're thinking in those terms. All right. So it goes to show you that picking the right pair when the dollar is trending does matter too. So for me, I'll always choose USD JPY over USD CAD. And of course, gold goes without saying because trading gold at any time, to be honest, is good if you're in the right direction. And same thing with Euro USD versus pound USD. Right now, Euro USD has a bit more of an advantage when the dollar's gaining strength than pound USD. There's a bit more sensitivity there. It means the pound has some strength coming in on its side as well. But you get the point. I just wanted to kind of make that point to you guys so that you can follow through when I'm giving my analysis. So at the moment, what do you do right now? Like, as I said to you in the previous analysis here, which did work out well, when we looked at gold a little bit and other pairs, at this point, the best thing you can do when the market is trending the way it is, and it's clearly moving in one direction, you won't be able to catch reversals as easily from a daily perspective, like the price taking the high of a previous day, given a market structure break, return to some order block. You won't get that. So at this time, it will be very rare. In a period of time like this, the best way for you to trade in a market like this is to find what I call break and flip areas. So areas where we have very significant demand order blocks, I'll say H1 and above, if you're on gold, okay? To be honest, on any of the major Forex pairs, but H1 and above is good to start. I give an example. So if we look at this H1 order block, price went extremely long from here. We came back here with a spike, then price broke beneath here. And look, when the price returned, it filled a fair value gap here. And it also returned to the other side and is using this order block as supply. So if you got an entry here, which is one of the entries I taught, you had all this pip value all the way down here. Your stop loss could have gone above, which is 25 pips. And your target down here, if you ended out at the big close right here, is 312 pips. Okay, so, and that happened within a day. You could have been out within the same day because the entry happened in the Asian session and it carried through until basically the end of the day. So, I mean, if you were really cheeky with it, you could probably squeeze 20 pips and get this to be 300. So that's 1 to 15 in a day. Now, the price doesn't do this every day, but this is just a good example of trades you can capture, with these break and flips. Very, very simple, straightforward. This is the only pattern that I like to trade. When the price leaves a fair value gap here, prices were breaking beneath a major previous order block on the H1. Now, the reason why I say the H1 and above, and I don't say H4, I know that the higher the time frame, the more resolution you're going to get as to what order blocks to use or not. But if you've trained your eyes well enough, you'll be able to see. And plus on gold, because the pip movements are so large per candle compared to other pairs, you can really get away with the H1, even sometimes the M15 or 30, and capture these good moves. All right. But with this lovely trade that happened here, the way the price kind of played into my favor, I would say that if you can find an opportunity of that sort, this is what you want to go for. Now, the reason why I don't say H4 is that it's going to take 4 hours for you to figure out whether you're supposed to use this order block or not. And as great as you would have in terms of clarity, it would take a very long time to have. So what you've got to do, we'll use the H1 now. What I'm going to try and attempt to do now, I haven't looked at Euro USD or Pound USD at all, especially Pound USD. I haven't looked at it at all. So I'm just going to do a quick analysis just one time, and let's try and see if we can find the trade using this technique. All right, now quickly on the monthly, just checking where we are. So on the monthly time frame, price has taken a previous monthly high. Price is in the monthly supply at the moment. Okay, let's go to the weekly quickly. On the weekly here, we have the manipulation bar over here. I just want to check to see something. So we have a manipulation bar order block that the price has left here before pushing down for a short. I just want to see what areas that price can give us. So we have this low here on the weekly and this low. I'm just checking these. These two lows are relative equal lows, so there might be something here for us. All right. And of course, the candle that started off the year has taken this previous high right here. And then we've had the resultant short. And we have these lows that price has swept beneath. So we're in a situation here where we've had some weekly lows taken, okay, down here. The price has formed a reversal structure. And I guess that's what helped the price even push longer, because after taking these previous weekly lows right here, that leaves you good room to have some liquid. There'll be some sell stops beneath here that have been wiped out. Okay. Now, moving further forward, down here, we had a really strong move. The price took this low and gave us a very strong bullish movement, almost no resistance. The whole week, the price actually, this is on a weekly here. So right now, I'm looking at this point right here. We have an order block here, and we have a liquidity void. So the range of the liquidity void now, the updated one will be from this low right here. So I just had to draw backwards just for a minute. Take this out. So from this low right here, and then also from here. So this is the range that we have, right? So there's a liquidity void over here, which is a possible point of area that we can go for. That's the first part. So it doesn't mean to ignore this analysis, even though we're looking for the break and flip. Here's the trigger for the weekly movement short. Price took the high of the previous week. Market structure break situations here. And as soon as the week started, we got the drop. So now we need some sort of major demand zone. Now, how I do this is that if I can't find one on the H1 straight away, because if you don't have a 76-inch laptop screen or larger like I do, it's a little bit hard to see these things. Let me just get rid of the market watch. All right. So in this case, the way that the structure of the price is, the price didn't respect this H4 order block, which was already looking pretty ugly. So we'll go a bit further forward and take a look at these ones. So we have one here. Look at this H4 order block here. Can you see this, guys? So the price came here once, or in terms of candle body, we've had once, twice, and then it took off. In terms of wickage, we've had so many wicks beneath it. And if you notice, the price is broken beneath. We had a strong long. Where's the first place the price came to? Here. Second place here. All right. Now, I'll keep in mind that there is a fair value gap over here. The price may not come to it though, but I'm just going to keep that in mind. All right. So now that the price is broken and come to the other side, what can we do with this? Well, over here, we have a reversal pattern in this range right here. Okay. Now, to be specific, what's happened? All right. The H4 candle here has taken these highs. So if there was any short-term buy stops above here, they've been run. Prices come back down here. And if the price continues that way, then we could look for a trade to fill this liquidity void and get back to this order block if the price was to go short. All right. Now, the second thing we can do, which is even more simple, and I'm sure some of you are shouting this down the screen, is that we could just simply wait for a break here. This is the most obvious one. Now, I know that this will be the daily low. And as soon as you go to the H1, the picture gets a bit broken. But if we stick to the H4 for this case right now, and then work our way down, if there was a strong H4 body close beneath this area on the return right here, we can look for something. We can look for a little trade right here and stop loss above and try to capture some pips until the price gets to this new order block here. Or it's not a new order block, but back to this area right here, fills the liquidity void. All right. Get maybe to the midway, it's about 95 pips. If we get our stop loss right, we can get a stop loss above here, so it's about 10 pips. Now, if I go to the H1 over here, because of what we're doing, they're going to do some mapping here. Now, reality is that by definition, the demand candle or demand order block is the last candle before price changes direction. Now, we have two candles here after this supply zone. Some of you may choose to go for the two, but I want to be very specific here and go for the one. Okay, so we're going to set this trade up now. So on the H4 or the H1, the H4 order block is this area here, this purplish pink. I'll do something here. I'll change the color so that you can see this. And then we have the H1 candle, which is over here. So this is one of the cases. Now, I know I said you're going to have to wait 4 hours, but the price is pretty far away, so it's okay. But if you do want to capture a scalp, if we have a H4 body close beneath here and a H1 break, so within a H4 period, whenever that is, we can do something here. We may not have to use this whole H4 order block. We can be cheeky with this and take on an attempt to use this tiny little area here on the H1. Okay, now we do have to watch if the price is respecting it. And of course, this is not the most straightforward chart I chose for myself, but I just want to give you all the things that I would do if I was going to take this. And that's what worked with gold. So if we get the H4 break, and then we also get a H1 break on the return here, we can make an attempt for a trade, literally stop loss here, just above, and then look for the price to push lower. If it stops us out, then deep inside of this H4 area, we want to get in and go for a trade. Now, if you want to get in a bit sooner than this, now on the H1, we can have a discussion on this. Now, on the H1, this same line I drew here is actually a movement where the price has induced the previous daily high, broken market structure as it has, and now it's pulling back. What we could do is that we could take a demand zone from yesterday here on the H1. This is the other option, so I'm going to delete this. This is the second thing we can do. And we can simply wait. Now, because this is the low of the day, this low right here that the price formed today represents the low of the day. We could also say if we get a H1 body close beneath here and there's a return here, we can simply just take the trade from right over here. So break beneath, return here, put our stop loss 10 to 20 pips, depends on your risk management and your own lower time frame and analysis here. Okay, I'm just trying to go for more of a broader scale setup or just following the rules here, which my rules are simple. I always look for a break beneath on the H1. Once the price returns here, I usually put my stop loss maybe 3 or 4 pips above the body. So maybe 10 pips here. And then I'm looking for the same movement down over here. And to be fair, we can get 100 pips from the structure here because if we get in from here, 10 pips for 100 pips, that's a 1 to 10 risk to reward. That would be great for a trade. Okay, so let's see what we get out of this setup. This was just an example, probably a more complex out of the examples that I've shown you. There's much more simple ones like what gold did, but nonetheless, the point here is that in a market like this, until you sense the reversal, do your best to use these flip zone setups to get into positions. Okay, now the last thing I wanted to look at was the dollar, the Dow Jones, US 30. Now, for me, the US 30 is in a position where we could actually have such a crazy short. And I've been expecting one for a long time anyway. All right. On under the higher time frame here, if I was to draw this out, and just show you where I've been looking at this whole time. This last demand order block here. This swing low didn't return back into the order block here, and it's above equilibrium. So we're trading in premium pricing at the moment. Okay. Now I know that the price has made a new swing high, so I should extend this, which will probably make things even worse. But just sticking with the model I had for 2023 and before that, I do expect the is only a matter of time. Now, as the year has opened, the price has opened with the price taking the previous yearly high. So I'll call this a yearly stop run. Okay. If I go to the weekly time frame, you see this is the structure we have. Now, I think that the US 30 is very unique right now because there's only one demand order block holding the price from literally crashing down to fill this liquidity void, the next one down here, which has equal lows, and even this one. And this is what I've been waiting for. I know the US 30 is about to give us a major short. I just think that we just need to put ourselves in a position to kind of reach them. Now, for now, if we go to the daily time frame here, I am actually, and I've had a few US 30 trades on the short. I never swung them. I just kind of took my profit and went. But if we get a body close on the daily time frame of the US 30, okay, even if the price takes the low right here, which will be a trigger probably to reverse the price back into this order block. If we get this exact structure we've marked out, trust me, the US 30 is going to give a lot of pips on the downside. Now, it's been kind of bouncing around for many, many days now. 18 days to be specific. It's just been bobbing around this zone. But the moment the price closes beneath here and we get even the slightest return, I'm telling you that day with the US 30 is going to give many, many pips. And I'm expecting it to come soon. For whatever reason, the price has been held here. I couldn't really tell you. To be fair as well, using the dollar index with the US 30 is not always the easiest thing to do because the dollar index doesn't always have the correlation we want. Now, in general, if the dollar gains strength, okay, the dollar gains strength, it should be that the dollar index, it should cost less dollars, or it should cost more dollars basically for the dollar index. If the dollar is becoming, and that's the thing that even when I say it, confusing me because if the dollar's weaker, then if the dollar's becoming weaker, or in essence, because the US 30, by the way, let me just stop for a minute and say this. The US 30 is the weighted mean average of the top 30 companies and their stock price. So their stock price is based on dollars, or their value is based on dollars. If the strength of the dollar increases, then really and truly, it should be a thing where you have a stronger dollar, so it should cost more. And you have a weaker dollar, then it should cost less because the dollar's weakened. That's what it should be. But it can also be the other way. And there's other factors that are involved in this. So that kind of confusion, they're even saying it, it always kind of muddles me up saying it because it could go either way. Because in some cases, if the dollar is weaker, then it will cost you more to buy this if you're buying it in dollars because you're going to need more dollars to buy it. So all of those different factors here. So, and not only just that, the US 30 is got other situations. I would say that even though I traded the US 30 and it does really well with the robot that I've built and etc., I still think that when you analyze the US 30, it is good to look at other markets if you can that are not the dollar index because interest rates, for example, would affect the US 30 a lot because it will affect how companies behave, what they do, their earnings, their profit to earnings ratios and etc. Those things do matter. So it's always a bit wise to not just try to use the dollar index for everything that's based on the dollar. That's what I would say. But for now, anyway, the US 30 is in a very interesting position. I'm not even looking to trade it until I see what happens with it. Now, of course, the price could stay where it is and just shoot up and continue going long. That's not a problem. But my point is that if there is a dollar break, if there's a body candle break beneath this demand order block, and we get the return back in here, at the first return with a good enough setup, clean enough conditions, we're going in. Because my first target will definitely be now. This low right here is not even the low of the month. This is just a low in this month of massive movement that we had. Okay. But there is equal lows here that have been here for so long. And also, to be honest, when the price took off here, It wasn't even an efficient move, but we move anyway. But there's definitely so much room for a big short. And that's all I'm waiting for. So I'll leave you with that thought. If the dollar index does do the close today, then even if it's a Friday, or we'll wait to see the return cleaning here, I'm going in and I'm going to swing it all the way down. But that's the last thing I wanted to share with you guys. And I hope that it does help you with your trading journey.